Everybody, will the Bank of Japan be successful in supporting the yen? The chart clearly tell no. Well, let's have a look at the charts. We could actually see here in September, October 2022 that there was a central bank intervention. Then about a year later in November, well, we saw another central bank intervention around the same level. This is the US yen monthly chart. So why is this 150 level so important? Well, it's a critical level. First, it's a stop run level. And second, it's a level that goes back for many, many years. It's a level where the US yen has been in 1998. So this establishes a very strong stop run level. So what we see here, the 150 level is a cluster of both a big number and a long-term stop run level. And now as we have tested the level several times, I mean, the level gets stronger and stronger. Now, will the Bank of Japan be successful in pushing down the price of the yen? Has these two central bank interventions been successful? Well, let's have a look. Let's drop down to the weekly chart. This was the first one in September. Well, we only saw a big bar, but we could see on the chart that something was going on, right? And then we found it in the press, Reuters. There was a central bank in September, right, to boost its currency since 1998. And that happened, I mean, the yen was losing value because there was a decision of the Bank of Japan that it's maintaining its ultra loose monetary policy, and that drove the yen to the 145 level. Now, what does it mean, ultra loose monetary policy? Well, it's nothing else than printing money, right, in order to get rid of the debt. Well, printing money is actually weakening, right? It's weakening the standing of the yen, and a lot of investors and long-term holders of the yen are running out of the door. Now, this was an intervention, and rightly shortly thereafter there was another intervention right here, right, at the 150 level. Was it successful? Well, at first sight it looks successful, right? But if we look at the things in more perspective, and that's what we always do, well, we have to look at the monthly chart. And this price, the US yen, is coming out of a big rise, a big stop run move based on this S1 pattern long, right? It was running through these stop run levels. And we have been way overextended from the moving averages. So we were expecting anyway a pullback. And what happens after a stop run move is, and that's standard, right, that it pulls back to the 21 moving average. We were actually locking in this target when we saw that there was something going on, that there was actually an intervention. So we thought, well, it would be a healthy pullback. If price got back to the 21 and we only get a touch, we don't even get a bar body touch, we get a wick touch to the 21, and what happens next? Well, it moves up, right? Basically the same speed than it moved down. So we've got a V-shaped recovery that shows the strength of the bulls here. The second row of interventions came in here. Well, you can imagine here, this is the first bar close, right, above the 150. So the central bank, they went into the weekend, right, knowing that price had closed above this historic important level. What they decided next? Well, there was another row of interventions, and they drove price down again. We get a glimpse, right, of how strong the bulls and the bears are, and we can see here the reaction on the monthly chart. Well, not much happening, right? There's a pullback, obviously, but the pullback doesn't even get close to the 21. So that clearly shows the strength of the bulls and the weakness of the bears, and that there's a lot of driving force, right, for a further weakening of the yen. So that's contrary to what the central bank of Japan actually, what they want to achieve. This week has closed again slightly above the 150 level. It's interesting to observe what the Bank of Japan is going to do over the next couple of weeks or months. Well, that's a huge stop run level. Well, let's get an idea how far we are. And well, we look at the patterns, right? This is an S1 pattern on a monthly chart that has triggered here, entry, stop. This is a stop run move. You can nicely see how these are the stop run levels, 1, 2, 3, 4, how price went through it like a knife through butter. This is the stop run level, right? Went through it, big number, and then there are further stop run levels a little bit back, right? So this is another one up here, went through it, and went through basically the last stop run level, and now it's testing the level. Well, from a pattern perspective, we should actually break that and see another big stop run move of that sort. That should bring us into the 180 level. So that tells us from a charting perspective that the Bank of Japan intervention should not be successful. In order to understand how successful central bank interventions are, well, we can look back. Because there was another central bank intervention, this time from the Swiss National Bank, right here in 2011, a good number of years back. And then, well, suddenly the news came up that the Swissy is pegged to the euro at the 120 level. Well, it's good to have a stop in the market, right? Because then a price got settled above this level. But what happened is, well, they could not hold it. It cost them a lot of money, a lot of losses for the SNB when they let go the peg. And what we saw is, well, we saw a big flush down and breaking immediately to a new low. Well, I'm convinced that these central bank interventions, well, they don't do much. If there were no intervention here or a peg, a price would have done more or less the same thing. We might have gone a little bit lower, have a pullback, etc. So I think we would be at the same level we are right now, because central bank interventions are not successful on the long run, right? It costs them a lot of money. Now it's really interesting to look at what happens with the yen, because I think the value, the driving down of the value of the yen has a big impact on the big picture outlook, which we will talk at another time.